So in this video, I want to break down all the lessons and things I learned throughout my long journey in trading. Information in this video will save you months and thousands of dollars, so if you care, watch till the end. So the first thing that I've learned is you don't have to trade every day. When I first started out trading, I woke up every single day looking to trade trades in the market. Over the few years, I learned that you have to focus on finding opportunities in the market. The market is a place that does not give you an opportunity every single day, so that took me some time to really develop. Once I was able to develop and understand that, I was able to approach each and every single trading day according to what the market presented. Now, the market will present different opportunities based on your game plan, based on your viewpoint of the market, and based on how you trade. So you have to identify the way you trade, what your strategies are, and then with this strategy or strategies, you need to approach the market with the ideology that the market may or may not present me an opportunity today, and if it doesn't, it's okay to stay cash. My problem was initially that I was like, hey, I'm spending 4 hours in front of my computer, 5 hours in front of my computer, I have to put on a trade, I have to buy something, I have to sell something, and that would lead me to having terrible trades or me losing money and having trades that I had no business taking. The next thing I learned is you must adapt to the market. Over the past years, I realized how the market has changed over the year and how the market has seasons, right? So the way the market is moving now, the way your trades are going now may not happen in the next upcoming month. A quick little story. There were times when I had great weeks, great days, and great months. Most of the time as traders, when we have big months or big weeks, we think that momentum will continue and those opportunities will continue to present themselves. But what happens is in certain situations or in the market in general is that the market shifts its direction or it pauses in the direction it's going. Your job as a trader is to understand that, recognize that, and make the proper transition. Remember that before moving on, do not forget that in our channel, besides all of that useful materials and guides, we can give you profitable strategies and educational content too. So, if you're trading a crazy market that is rallying, that is trending and having a strong uptrend, right? Some strategies may be working in that market, some plays may be working in that market, and the way you approach the market during that period may be beneficial. But now, then the market transitions, you as a trader have to adapt and realize that. If not, then I've seen happen traders start blowing a lot of money, having big drawdowns because they're not able to recognize this big transition in the market, and it just causes them to keep hammering down on the same strategy or same focus that they have on the market. So next time you're trading, for a long period of time you notice that a strategy is not working, take a step back and say, did the market conditions change? Is the strategy that I was using now is not working in the current moment? Why is this not working? Try to understand the market from a macro point of view and realize that change will happen. And then it does happen, your job is to once again recognize and make that adjustment. Next, make sure you have realistic goals and you set yourself up for success. One thing that I notice a lot of traders do wrong, including myself, is we start setting money goals and we set unrealistic goals for ourselves in the market. This creates so much pressure in our trading that it causes us to take terrible trades and FOMO trades, which never leads to a good thing. In my early days, one thing I did a lot of was, I would say, I need to make $100,000 in my first year, I need to make $200,000 in my first year, I need to make this much and that much, my account to this date has to be at this particular value. All that did for me was, it created false expectations and it created so much pressure. Trading is a place where we don't need to create outside pressure because that outside pressure just does not help. The goals that I recommend you have, or the goals that I would set if I were to go back, are not money related. I would say, well, my first year goal is to make sure I can improve my win percentage. My first year goal is to make sure I can improve my risk to reward ratio, focus on my R multiple, and focus on things that I actually can control. Some things to break it down on what I think you should focus on are your risk, your game plans, and identifying opportunities. Make those little goals saying, my goal for the month is to make sure that I don't have a drawdown on more than 10%, or my goal for this month is to make sure my winning percentage stays at 60%, or my goal for this month is to make sure that my R multiple is above a certain number. If you're able to build those goals, going deeper into goals could be, hey, my goal is to not take more than 5 trades a day or 4 trades a day, or my goal is to not lose more than 500 a day. Those goals are things that we as traders can manage. If we manage those expectations well, we allow ourselves the highest possibility of success. If we make our goals, this month I want to make $10,000 or $20,000, all you're doing is creating false expectations and such high pressure for yourself, which most of the time does not work out. The only thing that really matters in the market is risk. The risk that you put out is crucial. Every trade we take as traders, one thing we can control is how much we are willing to risk if we are wrong. So before you take on any trade, one thing you should be doing is, hey, if this trade invalidates my idea and my thesis and says that I am wrong, what is the price point that I should take my exit on? What will I say I'm wrong? And what should that look like in a dollar value? Everyone will be in a different position. For some people, it could be $300. For some people, it could be $3,000. Depending on your account size and the stage you're at, you need to understand that once again, risk is very crucial in this journey. That is one thing you should control and you can actually control. Before you approach any single trade, guys, make sure you have a defined area of risk, meaning, hey, if I'm wrong, I will lose $300. And you need to accept the loss before you take the trade. One thing I did wrong in my early years and early days is a lot of times I would say, well, I'm gonna buy this stock or I'm gonna take this trade. If this trade goes in my favor, I'm gonna make $2,000. Completely invalidating the risk component. It's like you take a trade and you're like, I'm not going to be wrong. So you just go in and you enter the trade, put in a size without even factoring the risk because, hey, I'm taking this trade, I know I'm going to be right. Then those trades go against you and trust me, they will. If that risk is not managed well, you will have a really difficult time taking drawdowns or accepting drawdowns or just having a healthy P&L curve in your trading. So make sure you factor in risk, make sure you accept risk, and make sure you manage risks. Before we dive even deeper, remember that our Telegram channel offers more than just educational content and guides, so we also share profitable strategies that can make you a real impact on your trading. Join our community now to gain access to this valuable insight and start trading more effectively. The next thing I learned is that one of the main key things that every trader should be doing is tracking and analyzing their trades. Every single trader should journal their trades. When I started trading my first 2 years, I never journaled, I never measured, I never did anything. I would wake up, put in a trade, and not know anything about that I traded, what my R multiple was, what my win percentage was, and what my average win to loss ratio was. I had no idea. I was just waking up, putting on trades, hoping to be red or green, and calling it a day. That's what I did for my first year or two. During year 2 is then I really started taking trading seriously. One of the key factors that helped me elevate my game was to track my performance. I started tracking my data, looking at my winning percentage, average win to loss ratio, how much I make per trade, and how much I lose per trade. I analyzed the size I trade well with and the size I traded badly with. I started looking at my playbooks, my strategies, and identified which strategies were effective and which were not. When I started measuring and tracking those things, it allowed me to see that I was excelling in my trading journey and there I was lagging. I was able to cut off the heavy baggage in my trading and focus more on the areas that I was good in, the areas that needed more sizing, and the strategies that were working. I leveraged that in the right way. Please remember to join our Telegram channel. There you can access a wealth of free content that not only saves you time and money, but also enriches your trading journey. Our channel provides real-time market analysis, insider strategies, and comprehensive tutorials that cater to both beginners and seasoned traders alike. That information is what we wished for then started trading, so don't miss out on that. The next thing I learned is that if you really want to have good strategies, you need to have an outline example of your strategies that could be known as setups or playbooks. Having a playbook in the market is very crucial. Over the years, I've developed multiple playbooks. Now, my playbooks would look something like having an entry criteria, having an exit criteria, and having market conditions. For example, if I have a playbook for an opening range breakout, My entry criteria or market condition would be in a market gaps up. If the market has gapped up from yesterday's low or yesterday's closing session, then I'm now in a trading criteria zone. My second entry criteria would be seeing volume above average, breaking above a huge supply zone with an extreme amount of strength or buying pressure. If I can identify these things and put them together, I have a certain setup, a certain playbook that is effective for me to trade. If you do have strategies, my first question to you would be, what is your strategy? What's called? What's your entry criteria? What causes you to take this trade or identify this trade? What are market conditions that this criteria needs to be under, if it needs to be under any? And where would you exit? What is your exit criteria? Because having an exit in the market or having to exit any trade is always crucial. You can't enter a trade and not know where you're going to exit. Going back on the risk component, you always need to make sure, hey, I have an area there. If I'm wrong, I'm going to exit. So having an exit criteria in your game plan, have it in your playbook, just allows you to be very fluid in your trading and have a visualized game plan. Hey, this is what the strategy is. This is what my playbook is. This is what I'm going to take to trade. This is when I'm going to exit. And that just allows you to have something on hard paper, and that's what you want to do. Like I said, I wish I did these things early on. If not, I would have done better way early on, but obviously it took me some time. I went through trials and issues and failures in my first year to 3 years to really narrow these aspects of trading down. And the last thing I learned, which I think is extremely important, and I'm pretty sure you guys have also run into these problems, is that trading is about 90% emotional. I can't stress this enough. There's so much psychology involved in trading. One thing I hear people talk about all this time is, I want to eliminate my emotions. See, my thing is, you can't eliminate your emotions, right? We as humans cannot eliminate emotions. We cannot destroy our emotions, but what we can do is manage our emotions, get better at understanding ourselves, get better at understanding how we respond to certain things in the market. This ties back a little bit with journaling. My question to you guys, and I want you to process this for a quick second, is how do you respond there in a trade that hits your stop loss? Do you exit at that point, or do you panic and get scared, get nervous, or whatever the case is? Or do you actually follow it? How do you feel internally? How do you feel when a trade goes in your favor? Do you get way too excited? Do you get happy? Do you start looking at the trade and say, now I need to take this profit, I need to see green? How do you respond during these moments? How do you respond when you have 3 back-to-back closing trades or winning trades and you get too excited and now your next trades start getting impacted? That's there I learned that there are so many different ways that we all respond to emotions. For the first 2 years of my trading and so on, I tried every way to be robotic. Hey, how do I become robotic? How do I remove emotions? Over the years, I was like, wait, you can't remove emotions. It's simply impossible. So how do I manage them? How do I deal with them? For me, to manage them was once again understanding them, going into journaling, learning about how I react, learning about how I respond. Then I started creating something in my head, and this is one saying that's helped me a lot with every single trade. It's one of my favorite things as a trader. Always think about your next 100 trades. You can have a big trading day tomorrow, a bad trading day tomorrow, whatever trading day or trade it is. Think about your next 100 trades. If you think about the long-term trades and you think about the next 100 trades, you start realizing how small that one little win or loss is. But if you keep those losses manageable, you keep those gains manageable as well, you don't go crazy with risk and so on. All of those 100 trades, you start seeing real success. In every trade you do trade, it doesn't really impact your psychology. It doesn't impact your emotions. If I go in tomorrow and I take a trade and I lose money, cool, I lost money. Now why? Because I'm going to think about my next 100 trades, and that kind of puts my mind at ease. It allows me not to allow that trade to impact my next day or next trade. The same thing goes when I trade a big winning trade. Alright, I had a big winning trade. I can lose the next 99 trades. I can't get ahead of myself and I need to narrow that down. Those are some of the things that I learned in my years of experience. Like I said, I had a lot of highs and lows in my trading career. I know a lot of people are saying, well, this guy has made $50 million in this period. Most of the money that I made came in my last couple of years. The first 5 years equated to maybe 10% or 20% of my whole trading profits. Out of those years, 1 year I had a $7.5 million year. Just 1 year made up over 50% of my trading profits. That's just to show you that this is a long-term game. If you guys don't find momentum or don't find success in year 1 or year 2 or 3 and you stay alive and you keep consistent at it and you work on the skill sets the right way, and I don't mean just waking up and putting on trades and just going crazy. I mean you actually take trading seriously. Your success, your knowledge, your wisdom in trading, everything will start compounding, and year after year, you will see success. With that being said, thank you so much for watching. If you guys enjoyed this video, please give it a thumbs up and subscribe, and I'll see you in the next time. Thank you. Also, comment under our videos because it really helps us to make right content for you.